Good morning, everyone. Well, the Turkish Central Bank really surpassed expectations by more than doubling its key interest rate to 10% from 4.5% in a late night meeting last night, as well as raising other benchmark rates. The Turkish lira immediately strengthened by 2.6%, although that just erased the last 2 weeks of weakening and still leaves the currency as the second worst performing currency in the world over the last month or two, after the Argentinian peso. Nonetheless, the fact that the central bank was willing to take these strong steps coming after India's surprise hike in rates really improved sentiment in markets, and most Asian stock markets were up this morning. Risk-sensitive currencies such as the Norwegian krone, the Australian dollar, and the New Zealand dollar were higher as well, and the safe haven currencies, the yen and the Swiss franc, were lower. In this context, the weakness of the Canadian dollar stands out. It shows that really the very negative sentiment surrounding the currency. Now, the Australian and New Zealand dollars may also have been boosted by a report that investors in a troubled high-yield trust in China will be bailed out, thus averting a possible credit crunch in the country. Now, most emerging market currencies that we track were also higher, although the ruble was lower, suggesting that its troubles are more idiosyncratic. The euro is positively correlated with the Turkish lira, but euro-dollar moved slightly lower yesterday. That may be because of a story in a German newspaper that the decision by the German Constitutional Court on the legality of the Eurozone bailout system has been delayed until April because of intense differences of opinion among the judges. Now, the longer the case drags on, the less likely it is that the court will agree to the German government's request for a ruling that underpins the agreed bailout machinery. This is potentially a very serious problem that really bears watching. It could be a big negative for the euro. Today, of course, the focus of attention is going to be on the FOMC meeting. The market expects a standard statement following the meeting. From what all the Fed speakers have said, I expect them to continue tapering off their bond purchases at the same pace of $10 billion. As for the market reaction, at their last meeting in December, they weren't widely expected to begin tapering, and the decision to do so sent euro-dollar lower by around 1 euro cent. On the other hand, back in September, when they were expected to begin tapering and didn't, euro-dollar immediately jumped by about 2 cents. So those two reactions give the possible extremes in case of a surprise. If, as they act as the market expects and continue tapering by $10 billion, euro-dollar could decline slightly, given that there are probably some people who think it might not happen, but I wouldn't expect a major impact. There is no press conference after the meeting. For more technical analysis and more trading ideas, please see the full comment on our website, IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.